Alrighty, ladies and gentlemen, it is official. We just got a 75 basis point rate hike, or in other words, a 0.75 percentage point rate hike. And that puts the federal funds rate right now between 3 and 3.25%, and that is going to continue to increase because we have inflation right now, and we got to break this down. We got to go over the Federal Reserve, just a couple of key points here, the Q&A, and we're going to break down one of the dot plots in a couple of minutes. So sit back, relax, take a sip of your coffee, and let's just get into the video, guys. And if you want 15 stocks from Moomoo and 12 stocks from Webull, use those links down below, and let's talk right now, guys. So right now what we're seeing is the markets V-shape recovering like no other. Initially, when the statement came out, FOMC statement at 2 p.m. on the East Coast, just about an hour prior to me filming this video, the markets tanked. We saw SPY go from about, let's see here, 387 to 380, so it lost about 1.8%. And now look at it. It filled that gap, and now it's actually breaking the highs from before the meeting, or not even the meeting, but the FOMC statement, which again released at 2 p.m. And we had Powell come on, give the press conference speech, Q&A, and that Q&A is actually still going on right now, the end of it, and that's where we are. We're now breaking the highs of about an hour ago, and Triple Q is looking like it's doing the same. Let's pull it up. Triple Q is at, let's see here, this is actually doing even better. This was at 291 before the meeting or the FOMC statement. It dropped to 284, almost 285. It lost 2.3% of its value like that. And now look at it, guys. It is rebounded to 292. It is up 2.5%. And at one point, it was at 290, almost $4. It was up over 3%. So, yeah, this is crazy, guys. This is crazy. And at the end of the day, the markets were kind of expecting this, the 75 basis point hike. And now we're kind of getting that relief rally that I talked about. I mean, did I not mention this in my video earlier today? No joke, just a couple of hours ago. So if you missed that video, you got to subscribe. You got to hit that notification bell because you won't miss the content, guys. I mentioned how I wouldn't be surprised if we were to see a rally. And look at this. We're not completely breaking out. We do have a bit of an inverse head and shoulders forming here on Triple Q, but we're not completely breaking out yet. You guys can see we have the left shoulder, the head, and then the right shoulder. It's more of a lopsided inverse head and shoulders, but if we start breaking above, let's say, 295, 300, that's where it could really accelerate, but we're not there yet. Clearly on the 1-hour chart here, we are being rejected by the 180 SMA, and I think SPY is showing the same thing. Let's pull this up, then we'll talk a little bit more about the Fed here. So on SPY, it's not really an inverse head and shoulders, I'd say, but could you argue that this is, maybe not a double bottom, but we're seeing maybe a triple bottom, or, we're just seeing in general support at about 282, 283. And if we break 390, 95, especially 400 on SPY, that's where we'd start reversing to the upside. But clearly, guys, like Triple Q, SPY is still under the 180 SMA on this 20-day chart. And it doesn't look like we're reversing by any stretch of the imagination, even though we're up right now, even though the markets, Russell's up 1.1%, same with the NASDAQ, the S&P's up 0.8%, Dow's up 0.5%. Markets are crushing it, but the charts are not looking good for the bulls, that is. Not looking good yet. They could maybe, later today, or maybe probably not later today, but maybe in the next couple of days it's possible. But right now, that's what I'm seeing. So again, 75 basis point rate hike, and you all know the dual mandate, the general sayings that he has to go through. Jerome Powell in the beginning of the press conference, he has to say every time, he's like, we got to focus on the dual mandate. Our goal is to get inflation back to 2%. And if their goal was really that from the get-go, guys, and I've been critical of the Fed, you all know that. I'm not some kind of crazy economist or anything like that. I've never claimed to be an economist, but I've been very critical of the Fed, and I think they should have started raising rates way earlier than what they actually did. But if their goal was really to get inflation back to 2%, again, they would have started raising rates earlier, but whatever. We can't go back in time. We are here right now, and they're going hard. They're aggressive right now, guys. Again, 75 basis points. The federal funds rate right now is 3 to 3.25%. And before we actually talk about the Q&A, let's pull up this dot plot, which shows, now that we're on the topic of the Fed funds rate, this shows what the FOMC members believe is coming in the future, right? So this, well, to be more specific than that, this shows the midpoint of target range or target level for the federal funds rate from 2022 to 2025. And of course, the longer run, which they have the federal funds rate right around 2.5%, 3%, which is where they want inflation, longer run, right around 2.5%, right? So, and let me make sure you all can see this. Yep, you can see it. Right now, you are noticing a lot of the members have inflation in 2022, or not inflation, the Fed funds rate target level being between 4 and 4.5%. And look at this, guys. Next year, it's not like they're saying next year it's going to come down. In fact, it's going to go higher next year. Look at this. A lot of them are thinking between 4.75 to 5%, 4.5%. We have one odd person here at about 3 3/4, but most of them see it next year higher than what it is right now. And the following year, 2024, that's when a lot of them are starting to believe that, okay, we're going to start to see the Fed funds rate come down a little bit. Inflation by that point, at least their plan is to bring it down by then, and thus they can then start bringing down the Fed funds rate. So they see a lot of them see it. I'd say the majority of them see it in 2024 between 3.5 to about 3 3/4, 4% roughly, and we do have some in the 3.25% range. And then in 2025, a lot of them are starting to come down. So clearly, the Fed, based on this dot plot, these projections, they believe that inflation is going to be down by 2024, 2025, because 2025, most of them think the Fed funds rate is going to be right around 2.25, 2.5, 2 3/4, 3%, 3.25. Some people even, that's what they're looking at, and of course, longer range between 2 and 3%. So take it for what you will, guys. This is what the Fed is projecting right now, and of course, no one knows exactly what's going to happen. I mean, these are just projections. For all we know, it could be a lot higher for a lot longer. I mean, back in 1980, we saw inflation very high, and we saw interest rates at 20%. Something crazy like that, and I'm not necessarily saying that's going to happen again, but just keep in mind, with inflation, things could keep getting hotter for a longer period than expected, and once you think inflation's peaked, maybe it starts coming up a little bit more, or maybe it just stays high. It doesn't necessarily have to continue going higher, 10%, 12%, 15%. What if it just stayed at 8, 9% for 2 years, or just stayed at this level for a while? The Fed funds rate is going to have to come higher than those projections. Let's just be honest, 5, 6, 7%. So what do you guys think? Let me know your thoughts in the comments down below. And if you haven't gotten your 15 stocks for Moomoo yet, use that link down below. Deposit at least $100 and you get 15 stocks, each up to $2,000. And all those links help out the channel. I appreciate you guys as always. So yeah, I mean, this is it's going to be interesting. So Q&A. What happened in the Q&A? There was 2 questions that I liked a lot, which is why I'm covering them here right now. Is 75 basis points, this was the question, is 75 basis points next month a baseline? Pretty much trying to get out of Powell, what's coming next at the next meeting? Are we going to get a 75 basis point, 50, or are we going to get the whole 100 basis points, right? And pretty much the way Powell answered this, he said the median for year end suggests another 125 basis points in rate increases, meaning over the next couple of meetings, that could be split up between 50 and I think there's how many meetings left? Is there 2 meetings left, I believe, before the end of the year? So what? That'd be 75 basis points and 50 basis points or whatever, however they end up splitting it. Well, I guess that's really, or 100 basis points and then 25 basis points. I don't know. However they end up splitting it. And there are some other people saying they only expect another 100 basis points before the end of the year to be added to the federal funds rate. So we're going to see. And pretty much that's how we got out of that. And really, what are they going to do? 75 basis point next meeting, then 50 the next, or are they going to do 100 basis points and then maybe 50 the next after that? Who really knows at the end of the day? I don't even think they know. Maybe they have an idea, but they're not trying to give us 100% an answer, obviously. And of course, and he said this, they're committed to getting inflation back to 2% and getting to a restrictive level in terms of the rates quickly. He said quickly. So who knows? Maybe, and that's kind of the camp I'm in. I'm like, Rip the Band-Aid off already. Let's freaking go. Let's get the rates up high, or the Fed funds rate up high. Whatever. If mortgage rates go up, they're going to go up. It's part of the process here. Let's rip the Band-Aid off. Let's fight this inflation. Let's bring inflation down, and then we can slowly start lowering rates to a more normal spot. But to do that, they're going to have to jack these rates up, guys. Right now, we're only at 3 and 3.25. We have a ways to go, in my opinion. We have to get up to fight 8% inflation, 9%. We got to be at 8-9%. So, I mean, let's see. Of course, there's a couple more tools that they're using to try and bring inflation down from a different angle. But at this point, I think rates have to come up a little bit more. And of course, I'm sure a lot of you will agree. I'm just like, let's rip the Band-Aid off. So what's the incentive? Another question was, what's the incentive to continue front-loading the increases? And I kind of already mentioned that I kind of want them to front-load to even go harder. I want them to rip the Band-Aid off. But pretty much, Powell said to this question, inflation has not come down, which it really hasn't. It might have peaked, and it might be flat a little bit, but it hasn't really started to, decrease in a massive way yet. And who knows? Again, it kind of goes to what I said before. Nobody knows what's going to happen in the future, guys. I mean, what's inflation going to look like in a year? Who knows? But I know it's going to continue getting worse if we don't really get aggressive with these rate hikes, which I believe, again, let's rip the freaking Band-Aid off. So with that being said, guys, cheers. I hope you all enjoyed the video. If you did, hit that like button, subscribe. Let me know your thoughts in the comments, and get your 15 stocks from Moo, your 12 stocks from Weeble. All those links are down below. I'll catch you in the next video. Peace out.